Boom. Alright, what's up you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about how the two largest publicly traded companies in the entire world, Apple and Amazon, just finished announcing their earnings reports, and with those reports, also just finished disappointing investors everywhere. All right, so at this point in time, I'm sure you're aware of the fact that both Amazon and Apple shares are trading significantly lower in after hours and are very likely to trade lower over the short term as well following these bleak forecasts. All right, but what was so bad about these earnings calls? We're about to find that out. So we will go over a few key metrics, a few key points from both the Amazon and Apple earnings reports. Kick it off with Amazon, move on to Apple after that, and then we'll close out the video by taking a look at the charts, and I'll let you guys know how low I think both Apple shares and Amazon shares can fall prior to seeing a bottom. And once these two see a bottom, I think that will signal the end of the overall market correction, just because these two are absolutely tech titans and once again the largest stocks by market cap in the entire world. Okay, so that's the video, you guys. I do want to kick it off by asking you to let me know in the comments down below, did you short any of these stocks? Or are you shorting the market right now? Did you take advantage of the bounce we saw today? If you guys are part of the newsletter portfolio group, you know that we have been taking advantage of that as well, buying a whole bunch of put options, a flurry of put options over the past few days. So honestly, this is very gratifying to see. Let me know once again in the comments down below if you were hedged going into some of these earnings reports, and if so, congrats to you, cheers to that. But hey, also let me know, are you buying the dip? Are you fans of Apple and Amazon like I am? I love these two companies, you guys. I'm a huge fan of both Amazon and Apple. I'm a huge consumer of both products, but there is a big difference between being a fan of a company and being a fan of the stock, you guys. And right now, there's so many headwinds in the faces of so many companies that it's difficult to be bullish on the stocks. I mean, I feel the exact same way about Tesla. But hey, again, you guys, big fan of the company long term. Let me know if you are as well, and let me know if you're seeing these pullbacks as buying opportunities for your personal portfolio. If you're a long-term investor, perfectly fine. I do think these can be great buying opportunities. But hey, if you're a trader like myself, if you were short the markets going into earnings today, let me know down below, because we are going to be eating very, very good over the, as we close out the week and head into the month of May. All right, so that's the breakdown of the video, you guys. Also, give it a like, subscribe to the channel, because it is greatly appreciated if you do. Let's dive into what I want to kick off the video with, and that's what we opened up the video with. That's what the intro is to, and that is the intro to the newsletter that I wrote this morning, where I just talked about how I'm feeling currently about the macro environment, about earnings. If you guys happen to watch the video I posted on Sunday going over the earnings calls, a lot of the same principles that I mentioned there I will be echoing here, but a lot of that is coming to fruition, and it's great to see. And again, you guys, this is the fun part of playing the game, right? Having a macro thesis and having a macro stance on something and then being right about that. So let's read through this. Of course, I do touch on Amazon and Apple's earnings, but I'll read through this quickly, and then we'll dive into some of the specifics, once again, of both of those earnings calls. So this might just be the most volatile day we've seen all year. Exciting times, team. S&P, NASDAQ, Dow are all ripping back above water today following Meta's better than expected earnings report, but it definitely hasn't been a smooth ride. As you can see below, always got to mention Tesla at some point in these videos, right? As you can see below, if you haven't already, Tesla has whipsawed 8% over the course of the day. The price action that we've seen in the markets this week is extremely unhealthy, and this erraticism fuels my bearish macro argument even further. Okay, to get you guys, the price action we saw today, huge sell-off yesterday, followed by, the other day, followed by a kind of a flat day, and then immediately followed by a huge bounce back, you guys. Again, today's price action, Thursday's price action did spark optimism, but the price action is about as inorganic as it gets, and that's what scared me. And again, you guys, when we're in an uncertain environment, emotional trading, again, erratic trading is to me a very, very good sign that the trend will continue further to the downside, because uncertainty, investors all around do not like uncertainty, and the markets and price action obviously doesn't like uncertainty either. Okay, so although most tech titans are seeing green today, every single bearish macro indicator still holds strong. Raising rates, hyperinflation, and a slowing GDP, which means a weaker consumer. Again, you guys, we've been echoing these for months now. Apple and Amazon are the poster children of consumer-facing companies, and it would make little sense for them to forecast short to medium-term growth in their reports later today. I've probably owned 25 to 30 Apple products over the course of my life. Nearly every device I own is Apple, and just before I pressed record on this video, I reached from my chair, didn't even get up, to the Apple products that I have. So again, you guys, I have a iPhone, my other iPhone right here. I have the mouse I'm using. The mouse I record these with is an Apple mouse. I'm recording this on a MacBook Pro. I have, my AirPods right behind me usually. And again, you guys, there's a big difference between being a fan of the company and the products and being a fan of the stock. And right now, it's difficult. Once again, I just said this, but I'll keep repeating it. It's difficult to be bullish on any stock in the market, even after these corrections, just considering everything got so ridiculously hot and inflated over the course of 2020 and 2021. Okay, so again, personally, this is the point. This is all the wraparound, little tangent right there. But I personally haven't thought about buying anything as of late. So I haven't bought any Apple products, and I don't plan to in the near future, at least yet. Okay, I've had hundreds of Prime boxes show up at my doorstep, and I'm definitely still utilizing my Prime subscription, but those boxes have definitely slowed down. The point I'm trying to make is that even as a well-to-do, very fortunately and very thankful for that, individual who buys a lot of things, my behavior is changing and I'm slowing down my spending. If I feel that way as someone who's well off, then I have to imagine those who are struggling even in the slightest and are slowing their frivolous spending significantly, okay? So again, you guys, when you're worried about day-to-day, the cost of day-to-day things, again, this is a byproduct of inflation as well. Gas is more expensive. Food is more expensive. People are running out of money. When you have to worry, when you have to allocate your capital to living expenses, to things that actually matter, and you don't have that helicopter money that we've had over the past couple of years, you're not worried about buying about impulse purchasing, again, something on Amazon. You're not worried about buying another iPhone just because. You're worried about paying for your living expenses, and that's the reality of what's happening to Apple, to Amazon, to pretty much every consumer-facing company across the board. It's the same argument I have for Tesla. When people have less money to spend, companies who sell things to people make less revenue, and it's very, very simple. So that's that, you guys. That's just kind of the primary fundamental driver of all this, and that's really what I just want to reiterate prior to going over these earnings, just because, again, you guys, this just seemed so obvious to me personally, and it is kind of surprising how there were a lot of investors. I was watching CNBC earlier today, and there's so many investors who were bullish going into these earnings, and I really just don't understand how that's possible given the macroeconomic backdrop. But hey, you know what? It gave me an opportunity to double down on puts, which I absolutely did. I do want to say this because this is a line that hopefully you remember for future reference. Apple and Amazon are literally the largest companies in the world. I said this a while back, if you recall, but I'll say it again. The war isn't over until the generals are shot, okay? So by that, it means, again, the generals, the big dogs, the fangs, right here. Everything, Facebook got it last quarter, Google got it yesterday, and Amazon is getting it now. So is Apple. We're close to the bottom, but there's no doubt in my mind that tomorrow will be a bloodbath in the markets. Okay, you guys, and that's why I want to talk about the price targets after we cover the earnings. The downside price targets for Apple and Amazon, because once the generals are down, once they're in the ground, that is when you can move forward, and that's when I believe we will see the macro bottom to this overall market correction. Okay, so everything is 2020 in retrospect. Wish I had done a 50-50 split on Amazon and Apple puts. Bought a whole bunch of Apple puts today. If I'm being honest, should have traded those out for some Amazon puts, but that's all right because the QQQ put position, the NASDAQ put position I established, should perform beautifully tomorrow. And I'm obviously still bullish on my Tesla and SPY puts as well, given the general volatility that should occur tomorrow, Friday, maybe as you guys are watching this. And yeah, again, you guys, it's always possible. I'm recording this on Thursday evening. It's always possible for the markets to bounce back somehow. But again, you guys, there's very, very little to be bullish about right now. And if you don't want to dig into the macroeconomics, the macroeconomic backdrop, all the bearish arguments that we've been talking about, a very, very simple bearish argument is the fact that there are no bullish arguments to be made. Okay, so that's that, you guys. If you want to know how I will be trading tomorrow, Okay, if I'll be taking profits, if I'll be doubling down on some put positions, what put positions I have in play now, when I'm buying the dips, because maybe I bought some right Coinbase, Vuzix, Matterport, SoFi on the dip we saw today. I don't know. But if you want to know exactly how my personal portfolio is composed, which I do update on a daily basis, there's 40, 50, 60 positions in there at any given time that I do update once again every trading day. And I also send out the email newsletter every morning, the morning of every trading day during market hours, explaining my trades, explaining to you guys what's going on in the market that day. That's important for you guys to know as investors or traders as well. Okay, so absolute steal. I'm biased, but I truly feel that way. $15 a month or $40 for every 3 months. If you guys want to check it out, it's the first link down in the description box. You don't like it, just unsubscribe, but it is greatly appreciated if you check it out. Do myself and yourself a service, and yeah, hit that link down below. That said, let's get into the video, cover these earnings calls, cover a few key metrics from these earnings once again, and then we'll dive into the charts and I'll talk to you guys about downside price action. Amazon shares fall on bleak forecast and slows growth since .com bust. You can see currently they're down 9%. They were down as much as like 12.5%, I think, at one point during after hours, which is just insane for a company of this scale. Key points: Amazon on Thursday gave a revenue forecast that trailed analyst estimates. Growth rates are at their slowest since the .com bust in 2001. That's bonkers. The company recorded a $7.6 billion loss on its investment in EV maker Rivian. I mean, you could have called that one, right? Amazon shares dropped as much as 10% in extended trading on Thursday after the company issued revenue forecasts that trailed analyst estimates. Amazon recorded a $7.6 billion loss on its Rivian investment after shares in the electric vehicle company lost more than half their value in the quarter. That resulted in a total net loss of $3.8 billion. Revenue at Amazon increased 7% during the first quarter compared to the 44% expansion in the year-ago period. It marks the slowest rate for any quarter since the .com bust in 2001 and the second straight period of single-digit growth. So, what's very important to note, you guys, and this will come into play in Apple's earnings as well. I just had someone in the Discord channel, link to that down below as well if you guys want to join the Private Waves Discord. But just had someone ask, why are Apple shares falling if they crush numbers? They crush it on revenue, they crush it on EPS, which is earnings per share, but why are they trading down in after hours? The reason for that, you guys, and again, this is just a principle of the markets as well. Every single stock trades on future potential, not prior potential. Okay, although Apple crushed their previous quarter, they beat on top line and bottom line numbers. That's amazing. But investors are betting on future potential. They're betting on what's going to happen this quarter and the following quarter and the quarter after that. And right now, there's so many economic headwinds. There's just, again, everything going on in China, supply chain constraints, yada, 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 et cetera, et cetera. You guys know the deal with just everything going on in terms of headwinds for a lot of these companies. Pretty much once again, consumer-facing companies facing these issues. And Apple is no exception. They're facing that, and that's why Apple is down. Definitely not like Amazon, but down about 2.5% at the time of recording, okay? So let's go over some key points here. Apple's revenue grew nearly 9% year over year during the quarter ended in March, but shares fell nearly 4% in extended trading after Apple CFO Luca M. warned of challenges in the current quarter, including supply chain constraints that could hurt sales by up to $8 billion. That's no small number. The tech giant authorized $90 billion in share buybacks, which I guess that's good, you could say. Apple's revenue grew nearly 9% year over year in the quarter ended in March, and company said on Thursday, showing strong growth and bucking investor worries about a deteriorating macroeconomic environment affecting demand for high-end smartphones and computers. But Apple shares fell nearly 4% in extended trading after Apple CFO Luca M. warned of several challenges in the quarter, including supply constraints related to COVID-19 that could hurt sales between $4 billion and $8 billion. The tech giant also warned that demand in China was being sapped by COVID-related lockdowns. Apple CEO Tim Cook added the company was not immune to supply chain challenges. All right, so again, you guys, Apple is right now, Apple is fighting these supply chain constraints. Honestly, along with Tesla, better than most. But again, you guys, even though these companies make great products, even though they have had a great quarter, people are running out of money and people are running out of capital to consume with, okay? And less consumption, less money in retail, in just a consumer's pocket, in the average Joe's pocket, means less iPhone sales, means less sales of pretty much everything you have to sell, right? So that's the reality of it, you guys. Let's close out the video by talking about downside price targets. Apple. My downside price target is very simple, you guys. Just when you're looking at charts, when you're looking at hyper growth cycles like we have, again, you guys, it's very important to remember this isn't from the pandemic low. we are still up 2x. Where Apple's at now is up just about perfectly 2x, 100% up from the 2020 high that it saw prior to any pandemic correction. Okay, so still from 2020, in just a year and a half, Apple has over 2x. All right, and Apple, maybe as a company, has 2x. Their revenue is great, again. But, again, stocks trade on future potential, not prior potential. And right now, there are so many headwinds that it's difficult for investors to believe that the following quarters have even a shot at being as strong or close to as strong as the prior quarters, all right? So, I do think Apple, I wouldn't be surprised at all if Apple did reach the high it saw in September of 2020. When you see that bounce back, that's insane. So Apple went just, from where it was at the beginning of 2020, completely disregarding that pandemic crash, the black swan event right there. Apple, just from its high in 2020 to the high it saw just months later that year in September of 2020, was up 70%. And I do think just taking, general charting, again, this you can see this in every hype cycle, just a reversion to the mean, a reversion to the initial high of that rally, which you could definitely say is right here at about 130, just under $140, $138. That is going to be my price target for Apple. I do think Apple needs to see a reversion to the mean. When we're talking short term, I do think that this line of support will come into play right here, very visible line of support, this cyan line right here. So I do think we'll see some support at $1.50, but ultimately I do think Apple will slowly climb its way down to $1.38, 138 prior to hitting bottom. I do think that will be the bottom for Apple, though, unless something goes catastrophically wrong, which I don't think it will. That is my downside price target for Apple. Let's talk Amazon. And to get you guys, keep in mind, you guys, when war ain't over until the generals are shot, and there is still some downside to be had. So Amazon is down. I think Amazon, is down. If we go to the top here, Amazon's down $260. Don't have after hours trading on right here. So 260. Amazon right now is at about, 26. Say like 2640 or 2630, I guess. So Amazon is currently right here, like right around here, 2630. So Amazon doesn't have as far to fall, but same story, different chart here, you guys. I think Amazon will have to fall. I think it's pretty obvious that Amazon will find a floor here at the previous ceiling. Again, reversion to the mean, initial high of that rally back in 2020. Amazon really bounced back, but I would call this the initial high of the rally. This is the mean. And my price target for Amazon is going to be $24.50 prior to bottoming out, probably going sideways, going sluggy for a little while. The whole market's probably going to go slow following this period of hyper volatility. And after that, after we see that winter phase, is when things can finally start to pick back up again, maybe in a quarter or so. Okay, so that's the game, you guys. Again, anyone can make money in a bull market, but it is difficult. It takes skill to make money in a bear market, and I'm very thankful that the Waves fam, the home team, has been doing very, very well over the course of the past week or so, and I'm feeling very confident as we head into the month of May. You guys, again, if you bought puts, let me know in the comments down below. If you're eating good along with me, cheers to that. I absolutely love to hear it. And if you want to join the team, if you want to know how we trade, okay, not to copy, but obviously never advise you directly copy, but learn from my failures, learn from my successes, hopefully more so. Thankfully right now, very, very successful in the trades we've been making. So if you want to learn, if you want to join the Waves fam, first link down below. Once again, we'll call it a day, you guys. I'll also catch you guys downstairs in the comments to talk shop. And until next time, always remember, take action, make waves. Peace.